Well, good evening, all. Ira Epstein with your financial market wrap-up, and this wrap-up is for the evening of Tuesday, the 13th of May, 2025, getting on to 6 p.m. Central Time. And I was hoping to see a Tuesday reversal, but I don't think it really worked. You got it in one market, the Dow, which was down hard because the CEO left in United Healthcare, and they're a mess right now, but probably an interesting mess because they're not going away. It's sort of like a Boeing story, they didn't go away either. When you take a look at the other indices, they were up today as the market was hanging on a lot of words of what the president was saying in Saudi Arabia at the forum there, as he got promises of over $600 billion going to be thrown at the U.S. In fact, the Saudi prince said it will be closer to $1 trillion. You saw that AMD, Cisco, NVIDIA all got big business out of Saudi Arabia. They were all there. Musk was there. He was on with the prince. So you've got a lot of people there. America's doing business. So you may not like the president, but he's getting deals done, and that's what he thinks he is. He thinks he's a deal maker. He recognized Syria today. That's important. You have no real major economic news out from a government reports tomorrow. You get them on PPI coming out on Thursday. You're going to get the Mortgage Bankers Association numbers. They'll come out early in the morning. Interest rates are back to 4.5% in the 10-year note. Why? Because this market believes that we will have inflation because of the tariffs. We may also still see a slowdown. We don't know what to expect yet of labor. There's a lot to be looking at. However, the market's taken the high road. The market is saying that all these deals are good, that any of the tariff play, it can be absorbed between the customer and a at work economy, labor strong economy, and away you go. So the question many traders have been left with in the stock indices is the April 7th low the low? It was a climax low. Remember, it coincided with sort of a meltdown in the bond market. You remember that? And everything else going wrong with the tariffs. I remember my close friends that are heavily invested were calling me, what do I do? Do I come out? And I told them, you don't come out. You hold the line. No matter what happens, I said, you'll never know when to get back in. That's how it works in the stock market. I said, you've got plenty of cash, you've got plenty of stock, hold the line. And, tonight one of them called me and said, thank you. That certainly helped. And you need a calm voice every now and then. Sometimes I'm wrong too, Hold, and I told you to hold and it didn't work. But I do feel pretty confident that gold is still an inflation story. The dollar, I don't see why it would be rallying so fast. I think a lot of countries are just committed to owning gold and doing away with buying as many dollars as they have to until more of these tariff deals get settled. I didn't say they won't be going to the dollar. There's really no other better alternative. But there's nervousness with that now. So as you and I take a look, this is the first week that we're back up and over the 18-week average. That's very important. These are Fibonacci numbers. So I took it from the high, the recent high that we made, to the recent low. And these are your normal retracements. So here we're getting up to the 61%, 63%. It depends how you go with it. Retracement, and you're exceeding that. Some of us thought, I'm in that camp, that you were going to come back and test these lows. Now you're left wondering. I'm certainly wondering. I'm going, is this just a bounce? It's certainly one of the stronger bounces I've seen. You haven't taken out the highs that you made up here, and keep in mind those highs. You've got the high here at 63.29, and to get there, you still have to go 400 more points. It's interesting that Goldman said their target's, 6,500. So if you get there, they're not looking for all that much more now, but they'll revise targets if you get there. I still say this is a market that it's reached up to the sky. It's over the 200 to 100-day average, and it's fighting each time now at that upper Bollinger Band, and it's embedded. This is the part to keep your eye on. When and if the red line closes under 79, is when I think the correction begins. I believe that this momentum indicator, it generally moves ahead of price. They can go at the same time. It's rare price moves in front of the indicator. It takes an event that day for that to all happen. In other words, a war, a bomb goes off, some key person gets killed. It could be anything. I'm talking a major bad event, not a good event, a bad event when you have a bullish embedded reading. Then they both go together. Barring that, normally you get the momentum in front of price. And with the modifications I made on it, I've checked that over many years, and I believe that that's the case. In the NASDAQ, it's the same thing. You've cleared the 100-week average, the 200-day average, the 200-day average. You're at the upper Bollinger Band. You keep stalling at it, but you got your embedded reading. That takes over. Do I ever teach a client on the first run to a 100-day, 200-day average that you haven't visited in a long time? Let's talk, you haven't been back here, folks, since February, basically. I say that, you've missed the move already. Let the consolidation take place. Keep your hands in your pocket, because on a correction, you'll get very scared. And I do believe that in all these. The Dow hasn't even gotten to that number, so it's acting much weaker. Forget today's break. It's just acting much weaker. It hasn't got there, but it has the embedded reading. So on each of these markets, until that embedded reading is lost, I think the momentum is still up. Lose it, and my Jekyll and Hyde, they completely change. Now, right here, you're at Bollinger Band and coming to your first set of averages. So the two markets that are not with the super strength are clearly the Russell and the Dow. And the markets that are stronger, the NASDAQ and the S&P, as they're clearing those moving averages. That's a great way for you to look at it. I feel good in what's been happening in the DAX. As you know, I said, you really didn't have to go to the upper band. You've had this long run to the upside where markets sometimes just on their own, they need to consolidate, and you don't have to hit those bands. Keep your eye on the slow stochastic. It is fully embedded. It's starting to point down. Pointing down can be corrected if the market takes out the high of Friday. So we'll see if it does anything with that. In the 10-year notes, getting oversold, and you're down now to the first area that if I were short, I would be concerned. Now you're at the 100-day average, first time. You haven't hit that since back over here about a month ago, and the Bollinger Band. Doesn't mean you can't go lower, but it means I think the pros are taking money off the table, and I think the same thing in the 2-year. But this one can embed. So suddenly the market that the Fed could save the most is the one the closest to the market that's trying to embed on you right now. And that's because the Fed is put to bed. Fed bed. And the reason they're doing that is this economy right now is, number one, stronger than they probably thought, with the stock market coming back. The numbers, you still don't have tariff numbers that they fully understand. I don't think anybody does yet. Certainly, you'll have, everything gets tied up. We put on the tariffs. We give a 90-day grace. Think of all that you've done. Full tariffs haven't hit anybody other than China. They came off in no time at all. Had the Fed acted, and the president goaded the Fed today that they should cut interest rates again. I think you're going to get inflation, and I think the Fed questions if you're not going to get inflation from the tariffs. At the end of the day, a tariff is a tax on the American people. Your good costs more money. Where does it get absorbed? And that's what they're stuck. So they turn their attention, as you know, that they said if labor weakens a lot, they're looking, but the labor market hasn't shown that weakness yet. In the dollar index, a nice bounce, but that's all that it is so far. The market did come out of its downtrend, but I cannot say it's in an uptrend. It's gotten lower and low, higher, high. The first close over the Bollinger Band got immediately thrown back. And I told you yesterday, I would never tell my client to buy over a Bollinger Band. That's a $900 play in the market, $770. In the euro, you did the same. You've closed under and you're getting a bounce. But I'm not saying that's in an uptrend. And I'm not saying, in an uptrend at all. That's still in a downtrend. And the dollar's fighting itself to come out, and it did, of the downtrend. The dollar's out of the downtrend. The euro's in it. That's the interesting thing. In the British pound, you're at neutral territory, but bearish. This is where the market should see the pros that want to probe the short side do it with stops over this high, in my opinion, and they'll see if they can put it back down there. When we take a look at Bitcoin, Bitcoin's backing off a little tonight, about $800. I think this is a dangerous area. I think Bitcoin is up in part because Coinbase is going to be part of the Dow Jones. I think it's crossed the 100,000 level, and I think I was one of the first guys telling you out there I believed it was going to do that. And it was also something I had my clients go into, both in IBIT, and they went into it in the futures. And now this is a zone where I'm concerned, and it's probably time to take money off the table. It's that simple. I am not bearish. That's all that I'm saying. It's easier to play, I think, IBIT than the futures right there. When you take a look at Brent, you're getting a nice rally to the upside. You're overbought as can be. You've got the bounce. There was a study put out today by one of the analysts on Aramco, the Saudi company, and they said that they, within weeks, if needed, can kick their oil production from the 9.6 million barrels that they're doing now to 12 million within weeks. So you're not going to run out of oil, and that's why the Saudis are telling their partners, what are we going to do here? Everybody's lucky that the market has come up. The question is, who's paying attention to it within OPEC? Are they still overproducing? It's so tempting when prices are higher. In the WTI, still in an uptrend, overbought, might be going to the Bollinger Bands. We'll see where this all goes. But everything that the economy was supposed to fall apart, the markets were in trouble because of the tariffs. Trump could never make a deal. You do understand. Forget Democrat or Republican. Just understand what people were saying. Now the market's turning to the House. Can they get a tax deal done? We're seeing fractions breaking away from the Republican Party because everybody's got to get their 2 cents in and make their grandstand before this gets done so that their constituents vote for them again. This is very important. And I don't say that facetiously. It's very important. So I can understand the rally here. I do think gasoline, and I've told that to you here, I think that you've made your recent bottom, and this is that rally into that time of the year where the driving happens. And believe it or not, I'm wondering if natural gas isn't going to peak out here as it normally does in the summer months and begin down. I'm questioning that. We've had the rally. It stalled right where it should have, the 100-day average in the Bollinger Band. Can it go anywhere from there is the big question, and it's overbought as can be. I put that all together. I'll ask myself the questions on it, and I present them to you in my research in the mornings. I do special reports. I'm ready to do one. Today I was looking everywhere. What do I want to do one on? What do I want to do one on? And I couldn't reach my decision. When I look here at Mother's Day sale, it just goes to the end of the week here. So 3 months of my morning subscriber videos, any which way you want, or my full research, where you get my twice daily written updates, which includes the morning futures video. A lot of people take that, and then they'll take the Spider ETF with it. And it's every 3 months. So that's when you're going to get billed. This is 1/3 off that price. Go to iraepstein.com. You don't need a discount or anything. It's right on the website. Go to the word research. Can't be easier, can it? There'll be an icon up here. And if you're watching me on YouTube, they always have their circle here with the little eye now. And you click that, and it takes you right to the link you'll need. I'm Ira. You have yourself a great evening. I will catch up with you all in the other videos tonight. First thing in the morning. If you like these, please give a thumbs up. You take care.